Hello, today is Monday. It is the 6th of August, 2012. I was not planning on doing a video today, unless, of course, there was wild moves, which is not the case, or a really interesting chart, which is exactly the case. This is the 15-minute chart today for silver as of pretty much 3 o'clock Eastern Time, or 1500 hours, or 1900 hours Greenwich Time. And what we've seen earlier in this chart was those choppy looking movements where it goes above, below these moving averages sort of deal. You can see a little bit above it, a little bit below, above, below, above. Yeah, so it ended up bottoming in here, but it still need to get above this high. It did that. Nice support in here. But what is extremely interesting is how this thing is currently correcting itself from this low. And that means it's hit this high, and the sideways action encountered this one candle, this one period that had a move, bringing it down here, right down to the 38.2% retracement, and it regained back within the range within that period, which is a very bullish sign within the time frame, as what we're seeing here as is this thing looking to break out and try to break above this level, and maybe later on use this as a mark of support, but it's mainly just a short-term situation because it is a 15-minute chart. But it's interesting to see how this plays out because it's a very nice looking setup, at least for another leg higher. Now let's go back to the historical charts. This will be the third one, and we left off last time on December the 3rd, 2010, which is something of a similar sort of deal where it had its leg higher, its consolidation phase, and it's just breaking out as well. So therefore, we're going to start this from minus 18 period. So somewhere around here, we're going to start it. And let's bring in the next one, which takes us to January the 20th, 2011. So it did have another leg higher, obviously, on this spot, going up from about 28 up to about 30 and change. Now, there is no Fibonacci retracement within this chart, at least not within the lines. And the reason for such is because I have a low of the 1771. I have another site that says it's 1774. Regardless, it's close enough where it's the exact same. And therefore, the first Fibonacci number below is 2516, and that's well below this chart. So therefore, when you are seeing this, this tells you that it is at some point would be in need of a deeper pullback. Of course, when that would take place at the time, you never know. The answer was at 50, of course. Or else you're going to have smaller corrections. So instead of a 38.2% correction, maybe you'd be looking in at a 23.6 or a 15.4%. And the reason why you would use those larger numbers is because when you have major legs higher, that means you don't need to correct as much a lot of times, and therefore a 23.6% retracement, which would be in around here, would be a logical place that you would look for an area for support. Now, as far as this 18 moving average was concerned, this was a situation that endured its deepest pullback. There was a decent, okay size one that finished this off, but it obviously will continue to go lower in this January time frame because the 26 base that is so massive is being tested for its pretty much first time, although it was a small test in here. But 26 would be the next test. We'll move that on within the next episode as we take a look ahead of the next 10-hour chart on the next video. Take care.